So today we're going to talk about what is going to be a mega week for the stock market. There's going to be a lot of things going on this week. So today I'm going to point a few of them out for you, and hopefully there's some new information there that's useful for you and helps you with your week ahead. Before we do get started, I just want to say thank you so much. We did hit the 19,000 subscriber mark, which is absolutely amazing. So thank you for all your support that have helped me get there. The path to 20,000 is on, which is unbelievable to say, like to see that actual far left number turn. It's been a long time since it moved. So yeah, to get to 20,000 would be absolutely amazing. And obviously if we can get there by the end of the summer, that would be awesome. For the 19,000 subscribers, I did do a live Q&A session last night. It did go technically a bit wrong. Apologies for that. I did the first stream and I don't know what happened. I changed the platform. I did it through YouTube rather than StreamYard, and it just didn't seem to push the video out onto the YouTube, and a few people said there was errors clicking on it. And then when I did go back to StreamYard, it worked fine, and then we had an internet dropout, so it wasn't the cleanest of ever live Q&A sessions, so apologies for that. Hopefully when we do get to 20,000, I'll do another live Q&A session for you guys, and hopefully there's no technical problems when we do that. We do get to that point whenever that is in the coming few months, hopefully. So apologies and thank you at the same time. Look at pre-market's only down 0.5% when I look at the Dow futures, S&P futures, Nasdaq futures. By the time you guys see this, you know, it might have moved a little bit since then, but I was quite surprised because over the weekend we had the news about more tariffs coming in, especially like on EU and Canada. And I was thinking, well, this is going to spook the market a little bit. And the fact that it's only down that much is really surprising to me, especially when we see us like sitting at all-time highs now. And from where like the same sort of tariff situation, we've rallied up from the lows about 25% since that time frame. And the same thing that was causing the stock market to be so much lower only a few months ago is all happening again. And yet the market's like, yeah, we don't care. Strange. You know, if the market was still undervalued, I maybe get that. But you know, the S&P sitting at like, what is it, 29 times earnings right now? Like, that's not a cheap valuation. This is like a premium valuation. This is like everything's fine in the world, and we look at it and it's not, is it? So I don't understand why the stock market is doing so well, and why the stock market is hardly dropping on this news. I mean, people might argue the case, well, the reason why is because they know that quite often these tariffs aren't followed through with. And the other thing might be that because the tariffs that have come in is that, you know, we look at the economy, or the US economy, it's holding okay at the moment. Not amazing, but it's not been amazing for a while. It's not really the tariff related situation really that's helped it deteriorate from where it was 12 months ago. And inflation hasn't really budged that much, which is obviously was one of the main concerns, and obviously that hasn't moved. So we'll see what happens. I can't believe the stock market is where it's at this valuation, and it's not dropping more, but we'll see what happens. Leads us on to earnings season. We do have the start of earnings season starting this week, which is exciting and also crazy to think it's coming around already. So as always, we do get the banks that report first, with like Citigroup, JP Morgan, BlackRock. They'll kind of tell us what they're seeing out there at the moment. And then we have ASML reporting on the Wednesday. We'll see if they're starting to get over the issues that they've had. Was a little bit concerned around ASML because they were saying like, we're seeing a big slowdown, and everybody else was going, we're not. So it was a bit of a concern about ASML. But the only thing that really didn't get me over the line to buy it, because I think it'll be okay in the long term, is just the fact that it wasn't cheap enough. But if it has another drop, we'll see where we're at. But in the long term, I think ASML will be okay. Bank of America, Goldman Sachs, and Johnson & Johnson, Morgan Stanley, United, all the banks coming in there. Thursday is when we kind of get the first kind of big kind of one, which is Netflix. We'll see what Netflix are reporting. Their numbers have just been absolutely incredible. Like the fact that you could have got that stock at whatever it was, $180 or whatever it was back in that 2022 dip. Unbelievable. TSMC, PepsiCo's quite close to being interesting. If that could have another 10% drop, maybe that could be something that I'm interested in. So we'll see. And then 3M and a couple of other ones in there, but I won't kind of cover all of them. The UK is just as busy. We've got Ashmore reporting on the Monday, or will have reported by the time you see this video. We've got B&M reporting. B&M is obviously a big one for me. Being a bit of a roller coaster because we initially had the drop. We then had a bit of a bounce out. And then we've dropped back down to where we're at the lows again. I would expect them to put stronger numbers in than what they have been doing. The reason why is because the warm weather, I believe, should help them. People going into the high street buying things, and also the likes of their garden sales should be stronger. The other thing is insider buying. Insider buying is obviously a key sign that maybe they're seeing things that are a bit better going forward, and obviously there was the CFO buying in June, which is a key one after the warm weather. The CEO also bought, but it's not showing on Simple Wall Street for some reason. So yeah, I'm looking at B&M thinking this should be a time frame where they do decent or better numbers than what they have been doing. If they haven't been doing better numbers than what they have been doing, I'm going to be a little bit concerned. I would also expect the like for like to start improving now, because as I've said previously with like for like, they've not, in my opinion, been able to get away with it as much because they just did price increases last year, or now the year before. So I think they can do a few price increases. So that's kind of my prediction, is that the numbers are a bit better. I think the like for likes a bit better, and we'll see if that does happen, and if it comes true. I'll probably make a video on B&M tomorrow, unless there's not really anything to talk about, but I think there will be, so we'll see. And then we've got Barrett Redrow. We'll see what's going on with the housing sector. That seems a bit like what's going on there at the moment. Interest rate cuts, but was there a rush before stamp duty went up? We'll see what happened, what Barrett Redrow are actually saying. And Kate Box, I tell you what, Kate Box, that is getting close to being a buy, isn't it? I don't know if you've seen Kate Box at the moment, but yeah, they had the accounts delayed, and now they gave the results, but they said they can't publish the full results because of the auditor not signing them off, basically due to the acquisition. So they've had to delay it a little bit. It's not coming up with the future growth, but it is good, and future profit growth, it is good, but the revenue growth is good. You know, absolutely very good balance sheet, as you see here. And even on a valuation now, it's pretty cheap. I mean, it's coming up 16 times earnings, but I think on a forward P ratio, it won't let me show it here, but on a forward P ratio, I think it's like down to like 12 times forward earnings. So one to watch there, because if that does get into like the 10 times earnings mark, and I think it also pays like a lovely 5% dividend yield as well. Yeah, 5% dividend yield. They normally hike the dividend up as well, a good chunk. So could be about a 10% increase on that dividend. Then you're up to a 5.6% dividend yield. So yeah, K-Box is very close to where I'm actually thinking about maybe starting to increase that position for a little bit, or start increasing it again. It's been a long time since I've done that, so we'll check out their results on Tuesday. Wednesday, not potentially anything that I'm interested in. It might be something that you guys are interested in on there. Thursday, Wise is one that I'm interested in. I would really like to own Wise. I just need it about 20% cheaper. So we'll see if there's something in the earnings report that the market doesn't like, and if it does, it might give me an opportunity to go buy. Obviously, they're moving across to the US at the moment. Maybe that causes some sort of concern and drops it. More likely, I think it'll be the other way, where it does go up. Or one thing that Wise are focusing on at the moment is they're focusing on revenue growth rather than profit, and they're cutting costs for the actual product and transfers, and making it more cheaper and trying to crush competition. And then in the long term, that should benefit them, and which probably should work out for them in the long term. But in the short term, sometimes the market doesn't like it sacrificing profit in the short term for longer term gain, even though it's better for them. The market never likes it, and we've seen it before multiple times with other stocks. Mercado Libre is a big one. So if the market does do something like that, that would be really good. So I'll watch it for that situation. And then we've got the likes of Ocado reporting, EasyJet, DFS, Dunelm. That'll be an interesting one to look at. On the Friday, we have a couple of stocks reporting. Burberry may be probably the interesting one there. Seems like it's having another bit of a bounce there at the moment in Burberry, so we'll see what goes on there. And then you think it's done, and then we have the inflation data coming out. We have both UK and US inflation data. UK inflation data is not looking as good at the moment, so we're expecting another increase from 3.4 to 3.5, which is obviously a massive increase from where we were a year ago. So yeah, still... not looking good on the UK inflation side. Potentially could get slightly worse going forward as well. So but then again, I think I read over the weekend that they're potentially on about cutting interest rates again. I don't know how you can cut it when inflation's at these sort of levels, but I don't know. And then we have the US inflation rate, which is expected to go from 2.4 to 2.6 or 2.5. So a slight increase there, but still very much in the 2% range, which is obviously very good from where we were a year ago, and even where we were in January. A lot of people were thinking about the tariff situation would cause a lot more inflation than this, so to staying at these sort of levels is still good in my opinion. It's at levels where we should be seeing interest rate cuts, and we're not seeing them. Obviously, the Fed have somehow changed what they're supposed to do, and they're supposed to be reflecting interest rates off facts, and now they've come economic forecasters and they're trying to predict the future and what if so and so happens, which is just absolutely nuts to me. I can't believe they're getting away with it, to be honest with you. And yeah, you know what? I was listening to something interesting for you here. I was listening to Tom Lee over the weekend, and he was saying that if the US reported their inflation rate the same as what the UK reported, because obviously the US has quite a big component of shelter, which is one thing that I've always disagreed with as well. That's why I prefer to use true inflation over the US inflation rate, because the shelter is a big weight in, and it's a very much lagging indicator as well. So I always use true inflation for the US. I'm not today because obviously we're using the actual official figures. But if they were to use the same method that the UK do theirs, the US inflation right now would be, I think, 1.7%. Which, when you put it into that context, the US inflation right now is 1.7% compared to the UK's 3.4%. Like, it's half, and 1.7%, and yet we've still not seen any cuts in 2025. It's nuts, isn't it? For me, I've been banging on all the time about inflation. I don't know why there's more cuts at the moment in the US. There should have been like 3 or 4 cuts by now. And the fact that inflation still remains like this level after all these tariff situation, but the fact as well, when you put that method of thinking in, that if you were using the same method as the UK, and the UK is at 3.4 and the US is at 1.7. And yet the UK has cut 3 or 4 times this year, and the US hasn't cut any times. That just blew my mind. I was like, wow, what is going on at the moment with Jerome Powell and the Fed? They are very much out of touch with what's going on. So yeah, we'll see what happens. I actually don't know when the next Fed meeting is. I probably should have looked at it on this video, but yeah, we'll see what happens anyway this week. So a bit of a preview anyway, guys. Hope you enjoyed the video as always, and I'll probably see you on tomorrow's video, and we'll see if it's a B&M video. Thanks for watching, guys. See you in a bit.